Peter and I seem to be in the bearish camp a little bit. So to put one counterpoint against ourselves, Goldman recently did an interesting study, and they took a look at what amount of infrastructure for all the last, for the last 5 or 6 big bubbles, how much was spent on capex infrastructure as a percentage of GDP. And I've got the numbers here. So telco was about 1.5% of GDP spent in 1990s on fiber optics. Traditional tech mainframe hardware in the 80s and 90s, about 2%. Car infrastructure in the 1920s, 2.5%. Railroads in the 1890s, 4.5%. Today, if what they term as generative AI, 0.8% so far of GDP.
Hello, and welcome back to 60/40, the only podcast that deep dives Asia's tech and business headlines with the leaders actually driving the change. All right, so we've got a split crew today. Prashanth is with me in studio, and then Alexey and Peter are dialing in from Hong Kong and Melbourne, respectively. Hey, guys.
Hello.
Hello.
All right. So it has been yet another AI-heavy week. I feel like there's no getting away from it. But it also feels like we're starting to hit that inflection point between hype and just like pure optimism to some hard reality. So today we want to structure our chat into 3 different buckets. One, we'll obviously cover some of the bigger moves that we're seeing from the AI giants. Second, we'll do a quick reality check there of growing pains of using AI in the workplace. And then lastly, we'll kind of cover out and round up with the what ifs, like where could all of this be heading and what we might be missing. So, of course, the common thread is scale, AI, and hype versus reality. We're going to start with tracking some of the AI giants. All right, some of the headlines that we caught our attention from the last 2 weeks, I guess. One, OpenAI signed a $90 billion chip deal with AMD. This is stacking on top of course, their previously announced deals with NVIDIA and Broadcom. SoftBank spent $5.4 billion purchasing ABB's robotics unit. And then the thought experiment that's kind of started going out there, but really captured by the Economist article, which is, what if OpenAI went belly up? So with that, Alexey, maybe if I can start with you.
Yeah, we should start with
just that little tidbit of information,
just
right?
Tossing it out there. No big deal. Easy conversation starter. Nothing too heavy. A little amuse-bouche.
So let's put it this way. So OpenAI has been responsible for something like $2 trillion of market cap appreciation for the global equity markets, even though they're not listed. That Economist article actually made it interesting. Their conclusion was actually, it should all be okay. Which is not the right conclusion, in my opinion. OpenAI, if it fails, and failure can mean a couple of things, right? Like lots of people commit suicide after talking to ChatGPT, or companies decide it's actually not that useful and they migrate to other services, or they just people give money until up to a certain point. And right now, everyone seems to be ready to give them money. But that was also the case in the 90s. It was also the case in the 1920s. There is a limit, and we clearly are very far away from that limit, to be fair. If for whatever reason they run out of money and or run into other issues and stop and become unable to actually buy all these things they've promised to buy, $1 trillion market cap evaporation will very quickly snowball into a $5 or $6 trillion market cap evaporation. Because, if you look at, for example, Q3 earnings in the US, the Mag 7 are expected to, they're expected to grow their earnings by 25% year on year. The 493 are expected to grow their earnings by 3% year on year. So if you don't have that 25% factor driving the market, and I'd say half of it is AI hope and ambition and some reality, then you really have a global, it's not a global meltdown of GFC or dot-com bubble proportions, but it is a proper reset of market expectations. So OpenAI is systemically important in a way that perhaps no other unlisted company is in the world today.
And does the fact that they're unlisted somehow contribute more to the risk in your mind? Because, you could make a similar. NVIDIA is similarly tangled up in a lot of these different projects or co-investing. They're taking, equity in whatever shares of other companies, whatever. And so, but NVIDIA is obviously publicly listed.
Yeah. NVIDIA is printing money. We have to remember there's this concept of free cash flow in markets, right? And you look, they have it.
Yeah.
OpenAI, they're expecting to hit a revenue target of $13 billion this year, but still also expect to burn $8 billion of cash.
Yeah.
So $13 billion of revenue, $21 billion of expenses, and they've committed to spend $1 trillion over the next 5 years.
Yeah.
Now, I think they've already gotten 200 or 300 billion of extra capital commitments from people, but that's only a third. There's a long way to go. So yeah, I think there is a difference. I don't think it's an unlisted versus listed difference. I think it's a free cash flow positive versus not difference. I think it's a independent board, lots of scrutiny versus not difference.
I think the one thing I'd add, Alexey, to that is, look, unlisted companies only get valued periodically, right? And that is driven by a small group of investors who either commit or see the value and commit behind it or don't, right? So they don't actually get valued every day, other than the governance and other than the scrutiny and everything else that you mentioned. Unlisted companies only get evaluated periodically when they go out and try to raise capital. And so far, OpenAI has maintained a position of being the darling of all things AI. So they have a lot of, in the primary and in secondary kind of deals, they have a lot of love that kind of translates to actual dollars on their P&L or their balance sheet, I should say. So I think that would be another thing I would add to listed versus unlisted. I do have a few other points, but I think I cut off Peter, so I'll let Peter go, and then I'll jump back into some of the other points.
Yeah, I mean, for me, it's not OpenAI specifically. It's nor listed, unlisted. It's a capacity versus real demand balance. Because now OpenAI is leading the capacity. But what's really, I think, compounding the situation is everybody in tech close to the infrastructure game knows what happened with AWS and knows how Amazon basically cleaned the court with everybody else in the period of 2010 to about 2018. And you have now Microsoft, Google, OpenAI, and others going, I'm not going to let OpenAI alone clean up. So I'm betting the capacity too. And so you get 4, 5 major players building capacity at scale, at pace, all betting that they're going to win. That's not possible, right? The scenario is demand happens way in excess of what anybody's thinking right now, well before the cash becomes critical. And then obviously OpenAI is the most exposed because it's not like Microsoft is going to go under, right? But there's just so much systemic capacity in the pipeline relative to current demand, and you got to wonder, will it match or will it not?
Yeah. Okay, so maybe by the numbers, as Alexey said, OpenAI has committed to $1 trillion worth of spend, including, and they're trying to purchase with the AMD deal, they're buying up to 26 gigawatts of computing power in total from Oracle, NVIDIA, AMD, and Broadcom. Their revenue this year is forecasted to be around $13 billion, $40 billion next year if they manage to triple, which is what they're kind of hinting at. And then I think there's a JP Morgan report that says that they could hit $174 billion by 2029. And then, so how does the revenue of $174 billion stack up against their $1 trillion of committed spend? And then maybe Prashanth.
Yeah. So look, I think before I answer that question, I think what is a total global economy? Like we're at what? 120 billion, 125 billion, trillion, sorry.
Trillion.
125 trillion. We're a $125 trillion global economy, right? And if you if you look at OpenAI as a function of that, and if we truly believe that AI will disrupt almost every business in a very profound way, it's a matter of time and depth, then I think the 1 trillion seems like, well, that seems like a
NBD.
very, it's a small round off of a number, right? And
Yeah.
I think it could, and you could actually have 4 very large players come at it with full capacity, and you're still at 4 out of 120, right? And if you say, hey, look, even if our productivity gains are 5% or that efficiency is at 10%, you're still saying, hey, well, this is the addressable market and serviceable market are well within the range of what these companies can go and accomplish. So it's a question of, I think it comes back to the philosophical question, do we truly believe that AI will disrupt every aspect of contributing GDP? Now, of course, there's a lot of things that come into that GDP, including primary industries, etc. And there, maybe the robotics, which we'll talk about in a second, may play a role, or AI augmented robotics will play a role. But I think that's the main question: like, how much of this 120, 130 trillion dollar global economy?
It's the question. No, I kind of would like to caveat that that's not the only question. You also have to ask by how fast.
That's it. Yeah.
Because with OpenAI, now with Microsoft, if Microsoft throws $100 billion of cash, and it is cash that they have, they can wait forever, and it's just an ROIC issue. But with OpenAI, somebody will come, Oracle will come one day and say, I'm ready to get paid now. So OpenAI has got the extra risk of they actually have to come up with cash that they don't have. Whereas Google and Microsoft and Amazon, they are all spending cash that they already have. And that's the big difference.
But
the real question is, will the 1 trillion materialize, A, as fast as OpenAI needs it, and B, will it happen with OpenAI? It's like a double risk.
Yeah. But is that the risk of just OpenAI going under, and then like any of the capacity that they've built out would just get snapped up by some of these other players? So is it the risk of OpenAI going under, or is it the risk that OpenAI would actually a systemic risk to the AI economy?
I think that's a very interesting question. There's one big difference between that I've been reflecting on now versus the .com bust.
Yeah.
When the .com infrastructure got built, it was all fiber. And fiber has an interesting way. It's an asset that lasts 10, 15 years. You just change the electronics. You build chips today, are the chips worth anything 7 years from now?
Yeah.
So even if, like, what happens, right? It is a different dynamic because, the chips that are getting sold today, are they really going to have any use or worth 5 years from now?
And the training data and the models being built today, it's not just about the chips, it's also just how efficient the software is, right?
That's right.
If, DeepSeek showed that it's, we don't know by how much, but we know that it's a lot more efficient. So there will be upgrade iterations that may make some of the stuff that OpenAI is spending money on today completely obsolete. Now to Peter and I seem to be in the bearish camp a little bit. So to put one counterpoint against ourselves, Goldman recently did an interesting study, and they took a look at what amount of infrastructure for all the last, for the last 5 or 6 big bubbles, how much was spent on capex infrastructure as a percentage of GDP. I've got the numbers here. So telco was about 1.5% of GDP spent in 1990s on fiber optics. Traditional tech mainframe hardware in the 80s and 90s, about 2%. Car infrastructure in the 1920s, 2.5%. Railroads in the 1890s, 4.5%. Today, if what they term as generative AI, 0.8% so far.
Okay.
Of GDP. So, and that's one statistic, but there are many others that suggest that yes, things are getting pricey, things are getting dicey. It needs to be at some point there needs to be delivery of all the hopes and dreams, but we are very far away from bubble, tulip mania type territory.
And look, worst case scenario, you kind of invest in energy production infrastructure, right? Energy transmission infrastructure. If worst case scenario, you do have overcapacity of silicon in data centers that are highly optimized for certain functions. Worst case scenario, you end up with a world where we are partially AI augmented or 3/4 AI augmented, and we're not fully AI augmented as predicted in some of the demand calculations, right? But I still think you're fundamentally different than where you are today. Now, as for OpenAI, do they survive this? I think it's good to remain private for as long as possible. And as long as they have the talent, they'll find the capital. I think even if the Oracles and the Microsofts or whoever there or NVIDIAs come calling, I think everyone's kind of in the same soup. So I don't think any of them can afford for any of them to go under, right? So this is the too big to fail kind of playbook in some ways. And that's why if you look at all the cross investments and cross holdings and cross warrants that are coming out, I think the whole ecosystem's in, so you don't have a scenario where anyone can hope that an OpenAI going under will actually be beneficial to any of them. I actually don't think anyone's going to let OpenAI go under. I think it's important for OpenAI to stay afloat and maybe they don't get to $1 trillion in spends or servicing of $1 trillion, but I think those will get restructured as we go. I don't think it goes under.
Remember in U.S. bankruptcy context, what going under means? It means the assets, the people, they can still continue.
Yeah.
But equity holders get wiped, debt holders get wiped, and somebody steps in and takes what's left and keeps going, right? So that scenario is like, I'm not saying it's likely.
I think we're very far away from that.
Yeah. Right now, to the counterpoint of the bear camp, I'm sitting in Melbourne. Australia is token constrained. Right now, we, for example, Seek, we have to go to America to get our tokens. Like we have to shove our data across the Pacific, do AI over there, and ship it back. Just because there's not enough capacity in this part of the world, and that shows you just how constrained we are at the moment. The real question is, there's just a wave of capacity being built for 5 years from now or 3 years.
But that's an interesting point, Peter, because I was reflecting on this a little while ago. OpenAI is making all these deals for people to build stuff in the US. The Middle East governments are making lots of deals for people to build stuff there. There's not that much outside of China, of course.
Yeah.
In our neck of the woods.
No, there's not.
There's also not that much in Europe. And I know we'll get to robotics in a bit, but it feels like it's a very US, Middle East, and China infrastructure story.
This is where the overlap of geopolitics and the fragmentation of Southeast Asia, it kind of, raises some interesting questions, because what's happening is the US is saying those chips are staying here. They're not going anywhere, right? Like the chips are not going to go float over for quite some time. And so the geopolitics are, if you're a small country, or even a large country like Indonesia, you're not getting the hottest data centers with the hottest chips anytime soon. And that's a problem for this region.
Yeah. Okay. So Prashanth, you kind of mentioned how intertwined some of these deals are, and they are getting increasingly intertwined. So the question is, NVIDIA invested $100 billion in OpenAI, but then it could be round tripping because OpenAI is just using that money to buy the chips right back from NVIDIA. For this AMD deal, in addition to buying the 6 gigawatts worth of computing power from AMD, they also get the rights to purchase 10% of AMD as a company. And so the question is the intertwining of these deals and companies, is it a feature or is it a bug or is it just like so
this happens more often than we think it does, right? Like I think any company that is in the middle often will will take stakes in customers of theirs, will take upstream stakes as well, just to kind of protect its interests in some ways, right? And I think some of that is playing out. Where it gets a bit tricky is in the accounting of what you described as round tripping, right? So basically, if I pay you and in return you pay me back, and that money just went for a loop, and I just recognized it as I took equity and I generated revenue out of it, I think that is a big no-no, right? And I think a lot of people will call foul. I think in this particular scenario, it's too hard to tell from the outside if any of that is really at play. I do think it's just people trying to secure their corridors a little bit more. I think it's like, hey, I need chips in order to kind of do what I need to do from a model training standpoint or inference standpoint. And you need revenues, and you need to make sure that you have line of sight to revenues so that you can then go build that capacity in terms of this silicon. And I think that's kind of, and there's a little bit of that investment. Hey, like if you look at the AMD deal, for example, right? But just announcing that OpenAI will do this deep partnership and buy these M450s, these chips, MI450s, they moved the market 30%. Now, effectively, what has happened is you could say, like AMD benefited already from just the announcement. So giving these 1 cent warrants absolutely makes sense. So maybe the institutions and maybe the retail customers are eventually paying for some of these deals in a very convoluted way. And that's where the money is coming in from. So I actually think this happens all the time. It's just a question of you just got to keep a very close eye to make sure that there is value creation in the process of money rotation as well.
That's fair. I mean, I think for NVIDIA, the case is a bit more straightforward because they have something that everybody wants. And so they're pushing their advantage while they can get it, right?
Yeah.
That makes sense. The question is more, for me at least, it's like, is Sam intentionally doing this with OpenAI so that he builds OpenAI into a too big to fail kind of, so is it part of his plan?
I mean, I think there's another almost simpler explanation. Why pay full price when you can get a gigantic 50% discount, right? So OpenAI went to AMD and said, we want to diversify. We don't want to have only NVIDIA chips. We want you to sell chips to us. AMD went, great, here's the price. And OpenAI went, yeah, that's a lot of money. But if we tell people we're doing this, your stock price is going to go up. You will benefit. So how about you give me some warrants, which I will immediately sell. And now, instead of buying $90 billion worth of stuff, I bought $90 billion worth of stuff, but for $45 billion net cost because I've made a bunch of money on your warrants. And AMD went, well, no, that's crazy. We're not going to do that for you. And then then Sam Altman went, well, then I guess I'll go to Broadcom.
I'll go anyway.
Oh, okay, yeah, all right, fine, yeah. 45 billion is still a lot of money. Thank you very much. The end. It might be that simple.
All right.
And end of the day, who's holding the bag though? The retail is holding the bag, right?
No,
the retail investors.
I guess the value, but somewhere so how does the price of AMD go up? Because the demand goes up, so someone's paying into that, right? New money coming in.
No, because no. So the price went up because yes, maybe the new marginal investor went up. But remember, there were a bunch of retail, but there were a lot of previous retail investors who were extremely happy.
They're happy.
Yeah.
They benefited from this. But there's someone else who generated additional demand. Either there was net new money came in from somewhere, or net new demand came from somewhere. That marginal increase paid for the discount.
Yes.
But that's the entirety of the stock market.
That's it.
And that's a bubble. The last sucker in is the loser, right?
No. It's not a bubble until the last sucker is in fact in.
Exactly.
And we are
true.
Again. I maintain we are far from that. We are in late 1998, early 1999 territory. We're not yet in 2000. The crazy stat is that there's been no major permanent meltdown in markets. Like by permanent, I mean like a couple of years, without the Fed raising rates. And we have to remember what we're getting into, right? The Fed is lowering rates. The U.S. government's going to start spending more money in 2026 once they're out of the shutdown. So, there's a lot to be said for this bubble continuing for a bit longer. I would not bet against it just yet.
I agree.
Because I think there's more silliness and more expensive toy buying to go around.
Yeah, I agree. Not only that, but the money that is being spent right now will trickle into the US economy
For sure.
before the cash is due. That money, which is not insubstantial, it's like 800 or $1 trillion or whatever it is, that money will have the trickle down effects in 2026. So you get all the real estate companies, all the construction companies, all the
Energy companies.
you know, all the parts of the supply chain benefit for the next year or so, right? It's not until 2 or 3 years where the piper has to show up.
All right. The bears are quite cuddly.
Yeah.
They're bearing, but they're friendly bears.
definitely-
We got some friendly bears.
Yeah.
Okay.
For now.
Little
For
teddy
now.
bears.
Okay, let's go to SoftBank and robotics. Okay, so Masayoshi-san, now his AI play is touching obviously OpenAI, ARM, Intel, and is it Ab robotics?
Abrobot or
Oh,
ABB.
I thought it was ABB.
ABB.
Okay, all right. So I feel like he's taking a slightly different playbook and a slightly different approach to this. And so, does anybody can help unpack like what his overall AI play is?
I mean, I'll take the high level. I think his play, as always described by him, is this AI super intelligence layered on top of robotics, right? So he believes that there are things that these robots will be able to accomplish as if they had human intelligence or human plus intelligence, right? So that's his vision of the future. So and we've discussed this here. We were talking about like Chinese robots and the robotic Olympics, etc. We said, hey, it's good. Like, yes, you can have all these soft improvements or the digital improvements that come from AI, but the physical manifestation is equally important because you do want, in the second phase of AI and the third phase of AI, you do want independent entities to be able to collaborate to accomplish a certain task. And some of those tasks are digital, and you see these AI agents collaborating to do tasks today online, but you also need them to be able to do them offline. And I think that's an extension of the playbook, because whether we like it or not, and the worlds we live in is very digital, so we don't see it. There is a very large percentage of the world that actually happens in the physical kind of space. And for that, I think you do need these autonomous agents or autonomous robots that can actually collaborate with each other to accomplish tasks.
I've got a more simple thesis explanation, which to me makes a lot of sense. So what does ABB do? When you see a manufacturing line and you see a robot on a manufacturing line turning its arm left, right, and center and placing the tire exactly where it needs to be on the auto line, they sell those robots. That's what they do today, right? They do other things, but that's one of the things they do. Robots are constrained in that manufacturing process today because they can only sense so much and adapt so much. So in a more consumer environment, there's a reason why humans flip burgers is because burgers are messy and they're all over the place and they splatter, and a robot's not really good at figuring all that out. But over time, robots will be able to do more and more and more of the manufacturing jobs that are still left in the world. AI sensors like AI cars, AI self-driving cars are critical to that. It will help spur more robots in more places. And that's like a good bet. Who knows, but it's a good bet.
Yeah. He's just following the value chain, basically.
Yeah, that's it.
Yeah.
I think that's an eventuality. Yeah. So
there's a private equity fund we invest in, and the CEO of the fund believes that humanoid or close to humanoid robots in manufacturing spaces are the single biggest investment opportunity he's seen in his life. And the reason, if you think about it, think about a factory. You have humans in it, you've got to keep the lights on. You don't have humans in it, you don't need to keep the lights on.
Yeah.
You need to air condition it for humans. You don't need to do that for robots. There's multiple startups that have raised, they're being valued in the single-digit billions or maybe low, teens, for humanoid robots to carry boxes from the truck that arrives at the factory with parts to the assembly line. And the assembly line robots that Peter so accurately described, there are 3 or 4 big companies. There's Fanuc in Japan. There's KUKA in Germany that is now owned by Midday in China. And there was ABB. These are low margin businesses because it's all about, they have to be zero error rate in order to be better than human. They have to be cheap in order for factories to buy them. So it's a low margin business, which explains why people are willing to sell them. But they are going to grow gangbusters. And if you can in any way, shape, or form put improved, handling of items, I doubt OpenAI will do custom stuff for, he's a minority investor. He's not controlling, but still, controlling one of the three established players is a pretty big deal. That's why Midea bought KUKA. Fanuca's been approached 1 million times, and they are Japan's big success story. They refuse to let them go. So actually, I feel bad for Europe. Europe actually had two of the three big robotics companies in the world, and now they don't.
They should have gotten in on that ASML Mistral deal.
Yes, exactly.
Right? That should be the consortium there.
And the line for feeling bad for Europe just gets longer and longer.
And so I remember last time when we talked about like robotics being manufactured in one part of the world, but if augmented with the right type of AI in the US, could actually be a solution to US's manufacturing problem, right? So if the US, the US has two problems right now, or two challenges. One is train up their workforce to take on the jobs that they didn't want to do in the first place, right? Or figure out if these robots can now be truly autonomous and take over some of those jobs, right? I still don't know if these robots are capable of the extremely high precision iPhone assembly type of jobs with nimble fingers. But is that the direction of travel?
Yeah. I mean, I remember when we were at Apple, every time we put up a new line, we would obviously assess the cost of automating the line versus just having it staffed by humans. And between the cost of automation and then the error rate, the yield rate being so much lower in the beginning, humans always won out, right?
Yeah.
It was just faster and cheaper and more accurate. This was obviously 5 or 6, 7 years ago. But so anyways, I see the play here. Okay, let's switch gears. There have been some AI gaffes in the workplace. And so Deloitte caught a lot of flack in Australia. They used AI to write a government report that was to the tune, it was 440,000 Australian dollars. I think that's like 290 USD. It like made up sources. And then with that, on the flip side, here in Singapore, the Bank of Singapore launched an internal AI tool that can basically do in 1 hour what took staff previously 10 days, which is like the like wealth assessment, management, and collection of data to determine whether or not they can open an account for you. So is this natural growing pains, and are we just kind of overblowing it? Or?
Yeah, so I read the Bank of Singapore report in detail. To be honest, like, it's a much ado about nothing, to be honest. Like it's basically, there's 20 pages. It's source of wealth verification. It's like, looking at balance sheet statements, like account statements, and just coming up with a summary. It goes to show that as humans, we do a lot of things that are not always very efficient, and there are higher order things we can do. So one of the things AI does beautifully is synthesis and summarization, right? So it can read through hundreds of pages of prospectus documents or wealth documents and create a summary. Now, it can also go one step further and check if in the public data spaces, if that information does cross-check, right? So it could also do that, or it can flag for human any things that it's not able to kind of really underline the sources for. So that, I think, is not a big deal, to be honest. Like, I think this is stuff that we were doing perhaps last year or the year prior when, OpenAI just came out. Now, they're probably doing it in a safe, private, data cluster way. But that's maybe the differentiation there. The Deloitte stuff, I mean, that's just embarrassing. I don't have anything else to say.
Well, there was a lawyer in the UK a few years back who filed a brief written entirely by a chatbot of a chat GPT type thing of some sort, and it made up court cases.
Yes. Dude,
Citations.
Robert Kennedy's like "Make America Healthy Again" report was also largely AI written. He got called out for a bunch of it, like inaccuracies and yes, made up sources and
Yes, one
facts.
would think and hope that Deloitte has a better standard of audit than Robert Kennedy, though. Look, I'm sitting in Australia. There's obviously lots of talk about this issue, even at the boardroom, just the other day, right? So a couple of things. Firstly, it is a good reminder there, but for the grace of God, should you try to push hard and fast, but not overlook the security, the quality control, the processes that you have to put in place. And I think Prashanth made a really, really good point at the end. The Singapore example, it wasn't the example itself. But to do that example in a large corporate environment where you have to deal with corporate security, you have to deal with audit and risk, you can't be a startup and you can't have an 80% right.
Yeah.
It needs to be 98% right or 99% right. And to get those processes, particularly the IT cybersecurity, is not an insubstantial task for a large organization. We ourselves are dealing with it right now, and we're going as fast as we can. But these are very real issues. You just can't plunge in.
Yeah.
And I do give a bit of credit. Yes, it's not super fancy, but you got to go through all those, and it's the leading edge of what can
And
be.
They got it done.
And Deloitte,
The
and
stakes
Deloitte
are
are a
high.
reminder to put those things in place.
Yeah.
I have to say I am I'm in the wealth management space. That's what we do for a living as well, and I'm a little bit skeptical of the claim that they're doing source of wealth through AI in 1 hour when it used to take 10 hours, because
10
I
days.
guarantee
10
you
days.
someone from the 10 days. I mean, I'm sorry, bullshit. I guarantee you when he finished that interview, someone from his team said, "You just invited the MAS to our office, right?"
I was just going to say,
Oh,
you have to stand up to that scrutiny.
No,
So-
because that's what it is. And I'm sure we will get there. I have no doubt. But I also guarantee you right now, a human being is triple checking all of that anyway. And that hour still takes another day or two to go through it, because you don't always get it in a very nice PDF readable format. The source of wealth stuff. And ultimately, we're all using AIs in one shape or form, right? Like I think a few of you get my regular notes. I bet you can't tell which ones I wrote with AI and which ones I wrote myself, and that's kind of the point. We're there now. There are often times when we supplement our knowledge set because we're only human. So Deloitte doing this, I mean, to Prashanth's point, embarrassing and careless, but everyone's doing it. It's just that they check it afterward and they adjust it, and what they're not yet doing, and that's what the scandal will be about at some point, is they're not yet lowering their fees. They're improving their margins right now, but at some point, people are going to go, "Hey, hold on a second. It's taking fewer human hours, so for the robot hours, I should be paying you quite a bit less," and that'll come.
So that's my point, which is just like, to me, it's obvious that everyone's going to do it, and you're dumb if you don't start, right? But with that said, A, do you have to disclose every time you do it? And then B, do you rework your rate card? So it's like, all right, you want a report. If you want all human, it's going to be this much. If you want hybrid, it's going to be this much. And if you want all AI, then what's the point besides putting a brand name on it?
Yeah, I don't think the problem is whether you used AI or not. The problem is when it was hallucinating. Totally. Did you find it? I think that's where I would underline it. Exactly.
So do you think they should be obligated to disclose when they do use AI? Or do you think that is it just assumed that they're going to?
Yeah. I think you should just assume that everyone's going to use it and that they have cross-checked it. They stand behind it. Like, these are regulated activities, right? Like, let's go back to the Bank of Singapore. It takes, 4 months to onboard a private client now? Right, 4 months, right? That's pretty painful.
Yeah.
Like, I don't know what happens in the 4 months. Like, why it would take 4 months to onboard a customer? Not much, yeah. So then you're like, well, could that be more efficient? Yeah, it should be. If you look at the regulator's view, it's like, hey, you need to be very thorough in checking the source of wealth before you onboard the customer, because you're going to open the whole mall of services to them, right? And so as long as you can meet that bar,
right,
and you can do it in 4 days. That's your competitive advantage. But you still have to have a throat to choke when the MAS comes.
Right. So you're not sweating the process, you're just sweating the outcome. But Peter, you think it should be disclosed. Why?
Well, I think first of all, when you're serving the government, you need to be super, like in this situation, they should have disclosed it, and they should have put the proper
Citation.
controls in place.
Yeah.
I mean, when you sign up for government work, you just got to go the extra distance. Having said that, I agree with the more broad sentiment. In the future, it's like, do we disclose? Was Microsoft Excel used in the production of this report? Right. So it's just
I used Word, not a typewriter, for this one.
Yeah, right.
Exactly,
Yeah.
exactly. But I can tell you, making sure you have great responsible AI, great quality control will be competitive differentiation, without a doubt. And you see it, like Deloitte's brand in Australia has gotten trashed.
I have a question
by this
for you.
One incident.
But Deloitte's brand is trash in Australia. I'm pretty sure PwC's brand is trash in Australia.
Yeah, it's like, well, that has
Really?
been
Why?
going around as well. Like
It's not
we're running out of auditors.
All right. So that covers the giants in the office. Okay. Some other small, I think, headlines that piqued interest. So Vibe coding tools are apparently losing a ton of traffic. They're down 64% from their highs, literally just earlier this year. Then, there's increasing concerns about the environmental impact of AI, especially as we start talking about, the energy sources to fuel any of the investments that we've been talking about. But then Prashanth, you shared the X thread where like private equity is really excited about AI being tailwinds for the SaaS industry. So let's unpack. So maybe let's start with the Vibe coding tools. What do y'all think? Is this, again, a natural, is it just coming back to the norm after initial?
Yeah, look, I was one of the fanboys of Vibe coding on this podcast. I came out here and said, it's going to be a big deal. Every designer, every product manager has now a chance to prototype a tool and, you can put stuff out there. But I think it ran its natural course, right? So the people who are seriously coding have adopted AI augmented coding in a very profound way. And I think engineering teams definitely, if they're not already augmenting their software engineering practices with AI, then I think they're missing out. But I think this was expected, right? If you look at like companies like Lovable, I think they were at $100 million ARR.
Yeah.
They've come down significantly, maybe 40-50% off that. And I think a lot of those were casual coders. Like for example, my kids were both casual coders, right? That's $25 and another $25 per month, right? And at some point I realized that they built a couple of apps. They kind of futz around with it. It was cool. And then they gave up. I let the subscription run for 3 months and then I hit cancel because, and I'm sure that's just a very small anecdotal example, but if you just look at it at scale, that's what happened. Every high schooler, every kind of non-techie product design person, everyone tried their hand at building an app, right? I think even my mother-in-law tried to build an app. And at some point you say, okay, well, that was cool, but it's not my thing.
I'll give you my version of this. We had one of my junior people built something. He actually has a software engineering degree. He just didn't want to be a software engineer. So he works in finance, and he took those skills and he built a few things to make life easier. And he showed it to me.
Source of wealth tracker.
Yeah, well, we won't talk about what things it was, but so we built it. It looked really good, and we played around with it. And I said, actually, I think we can implement this. But I have one question for you. The moment I put a client's passport number in here, how confident are you that we won't go to jail for it going public?
Mm-hmm.
And he immediately went, maybe we should pay someone to audit this.
Yeah.
Well,
which we did. But now we're all of a sudden we're now away from vibe coding again, right? Because now I spent money to make sure that it's properly done.
Yeah.
So my lovable anecdote, just to round out the anecdotes. So I'm going to agree with Prashanth on this. So after Prashanth's fanboy episode on his Lovable experience, I myself go, I'm going to sign up for Lovable and try this out. And I built an awesome. I paid my $25 a month or whatever it is, and I built my photography website. It's www.petersphotography.org. Please visit it now.
Free advertising, yeah.
Please get
What a plug.
the SEO up. So anyway, so I did that, and then I was like, oh, I experienced it. I canceled it. Right? I'm like,
Right.
when am I going to use it again? Right? I did my thing.
Yeah.
Our UX team uses Lovable now all the time. It's changed the way they prototype.
Correct.
We don't use it to go to production. That's not what it's for. It's for the UX team
Yeah.
to be able to say, oh, product manager, you want something like this? How about this? And now instead of a wireframe or, some sort of graphic or something like that, it's a working prototype. Like it's a prototype.
Yeah.
And it's it's kind of like Zoom during COVID, right? So 8 billion users sign up to Zoom, and then after COVID, the whole thing crashes. But what you left with? You're left with a pretty interesting business that some people use all the time for work. And that's kind of the Lovable story.
Yeah. I mean, I think that's fair. I think we were all just so excited because those ARR numbers look so good. And everyone's like, oh my God, it's like, it's going to totally change how startups are valued, how you can build these like huge businesses, which to some, I mean, for some folks is still true. But I feel like it's settling more into kind of like almost a social media, like where you have to track DAUs, MAUs, like whatever, to really see where your true base is.
Yeah. And I mean, I was looking at the Cursor numbers, right? So Cursor has one of the highest revenue profiles to date. But then their costs far exceed their revenues because it just flows right through into. So basically, they're
capturing,
subsidizing.
like, so little. Yeah.
They're subsidizing. The underlying LLMs and the tokens to their end customers to the extent that I think they're looking at revising their pricing models. But now, even if they did revise their pricing, I don't think we're getting off that. So we've gotten so used to kind of like the augmentation in our software development cycles that we're like, okay, this is now our digital engineering twin.
Tool.
Yeah, so it's like
a tool.
engineering twin. So basically, is part of the run rate for the company.
Yeah.
So I think that's
you're going to pay for that price
we
bump.
continue on.
Yeah. Okay.
And I think for serious engineers, I think that makes a lot of sense. Which you brought up a point around MAUs, right, or DAUs.
Yeah.
So one thing I know we talked a lot about OpenAI at the start. OpenAI still has 800 million weeklies, right? That's like more than most social networks. That's like more than most, web search engines.
Yeah, it's sticky.
So it's very sticky. So, if you're what we didn't mention is all the things around Sora or agents or shopping or payments or what have you. If they're truly kind of committed to making that work, with 800 million people, a large chunk of them being very high ARPU, I think it was like close to $300 a year or something. You could actually make a very, very, very big run for this thing. So I'm still very bullish on what they can pull off if they just stay focused and stay the course. But yeah, that's my bull response to this very teddy bearish episode.
Okay.
And I would just like to say, I still think Lovable is really cool to play with.
It is. I mean, it is really cool to play with. And Cursor, too.
I agree.
For free.
For free.
Yeah.
Yeah, exactly.
All right, let's talk about environmental costs. So, I mean, I think we were talking about how there's no major data centers coming in Southeast Asia or anywhere outside of like some of the bigger hotspots. I think the other question is like, actually, do we have the resources? Do we have the energy capacity to even fund one, to fuel one of these? Should any of the players choose to actually place one in this region? And so beyond the geopolitics and the feasibility, it's like, do we have the raw materials in order to actually do it?
Yeah, I mean, the answer for most part in this part of the world would be nuclear. And I think that requires significant,
That's like a whole nother
government commitment.
Exactly.
Look, I think people would absolutely love to set up a data center off the coast of Singapore if someone could just figure out how to power it. You can't burn natural gas to that extent. I think you need to find ways to make it nuclear. Now, you could do the small modular reactors, but those don't produce enough energy to run one of these like gigawatt or multi-gigawatt like data centers. So I think energy is going to be the true answer. So you'll have to find true energy efficient responses to the problem, because the data center can be built. You can figure out the export controls with the chips, but ultimately it's going to come down to, can you build and protect the energy required for this? And that's going to be the true answer for whether it's going to be possible.
I mean, that's very much the Singapore story, right? Is like they shut down data centers here because the energy was just too expensive for them to fuel. And so now I think when Singapore talks about it, like, and obviously there's a lot of data centers being built in JB across the border, but here I think they're not sweating it. Like they know that this ship is, they're missing this boat and they're okay with it, because I think the cost from environmental and then the cost from the energy perspective isn't worth it. But then what you do hear them talk about is like quantum computing, right? Like some other like aspect of the supply chain that they feel like they can make a play at.
And I think, look, we're looking at energy as systems are built today, right?
Yeah.
I think these systems also have to get a lot more efficient. We do have to take a slightly more deep-seekish approach to this problem. And I'm already seeing, like on my LinkedIn feeds and some of these threads, like small groups of people are actually hacking away by combining Apple kind of chip stacks with OpenAI, with NVIDIA chip stacks to kind of make things more, at least the inference part of things, a lot more low cost. And so I think that's the direction of travel. Efficiency is also equally a big player in this.
I totally agree with that. And I have not seen every report I've been able, or every article I read on this topic. Everybody takes the current usage of a current chip or a current search and then just extrapolates it out. Mm-hmm. And I've never seen anything that credibly plots what will be an exponential or whatever exponential, the reverse of exponential experience curve, efficiency curve into the demand for electricity. Like maybe it exists out there. If any listener out there knows of those, please forward it to us, because I would love to read it. But I haven't seen it. They're all the simple, every search generates this, therefore blah.
Yeah. But there's I don't know if I'm going to pronounce it correctly. The Jevons paradox. Yeah. It's the idea that, yes, there will be efficiencies gained, but basically the overall capacity will rise so that the total number will still increase. And so even though, like, even taking those into account, we will still end up consuming all the energy needed based off of current models, because there are use cases, obviously, that we can't even imagine.
Thought of.
Yeah, exactly.
But this assumes a finite amount of energy, and if it's so productive, if it's so value additive, we'll be able to afford SpaceX flights to put some servers into space where there's plenty of sunlight and there's unlimited energy,
and things are pretty cold too, so you don't have to cool
it. Exactly, and you don't have to cool the thing. Like it is. When Netflix came out, people started talking about how much energy it's consuming. Mm-hmm. When Bitcoin came out, it was talking about how much energy it's consuming. When YouTube came out, we were talking about how much energy it's consuming. When the internet came out, we were talking about how much energy it's consuming. This is what we do as a species. We take energy and we convert it into stuff we actually want.
Yeah.
So we're going to figure it out, and it's not going to be an issue, though it might not be on the island of Singapore.
Yes.
Or Hong Kong, for that matter.
Yeah. I mean, I would say the data center thing it's kind of sad, because they're like razing down places to build up these data centers and sucking up energy and water. So, I mean, the environmentalist in me is a little bit sad.
And I think that can't be the answer, right? We can't be burning coal to power an AI plant, right? That cannot.
But why not? What else are we going to burn coal for? Why do you think the Middle East is so gung ho on all the on all the AI stuff? It's because they know that in 20 years we're not going to be oil.
We don't need
it. Buying oil to power cars.
Yeah.
So they're going to start burning oil to power the data centers, because it'll be the cheapest way.
Yeah.
It's unfortunate for the environment, but this is where we're going, because the SpaceX thing is going to cost more money than coal and oil for a long time.
Yeah.
Yeah. Maybe that's the answer, but I actually think, it would be a travesty to see farmlands or forests, be used up as, data center space.
Yeah, which, if big data centers were built here, that's exactly what would happen. So,
Yeah.
anyways, okay. Thank you for joining us on this
On
week's...
that note,
Yeah. Thank you for joining us for this week's session of AI group therapy.
Yeah.
What have we learned? We are in a hype cycle, but not at the edge of the bubble. Yeah, exactly. The last sucker has not entered the room yet.
The railroads were officially the worst.
Yeah, exactly.
As a percent of GDP spend,
Yes,
so we're okay.
Yeah, exactly.
We're still about a fourth of the way there.
Yeah.
All right. Thank you for joining this week's episode of 6040. You can write in with any topics or speaker nominations at 6040podcast@techasia.com, and we will see you in 2 weeks' time.